Legal bookkeeping, an exercise on the transfer journal. In a legal practice, two sets of accounts are essential: business accounts and trust accounts. Why is that, you may be wondering? It is because attorneys need to separate the business transactions from the trust transactions. What are the differences between these two accounts? The differences are simple. All monies held in trust are monies paid to the attorney by their clients for safekeeping. These monies do not belong to the attorney and can never be used by the practice. Business money, on the other hand, are all monies earned by the practice, which can be used by the practice for the expenses of the practice. The function of a trust transfer is therefore to settle the client's account into the business account with that client's trust funds from the trust account. The amount which is available for transfer is established by comparing the balance of the client's business ledger with the balance of the client's trust ledger. Once the amount available for transfer has been established, the transfer is recorded in the client's ledger account as Book of First Entry. You debit the matter trust ledger, which reduces the balance of the client's trust funds. You credit the matter business ledger, which reduces the client amount due to the firm. The actual transfer of funds occurs when a trust check is issued and deposited into the business account. This transfer is recorded as follows. The first entry is the trust transfer. You debit the transfer control account and you credit the trust cash book. The second entry is the business receipt. You debit the business cash book and you credit the transfer control account. Here is an example to better illustrate this. Part 1. Client A paid 5,400 Rand into the trust bank account. The matter has been finalized and the fees are now due to the practice. Part 2. The fee has been raised in the business account as this is the practice's income. The fee journal entry is raised as follows. You debit client A with 5,400 Rand and you credit fees with 5,400 Rand. The description is as per statement of account. The first journal entry. You debit client A in the trust ledger with 5,400 Rand. You credit client A in the business ledger with 5,400 Rand. The description is transfer funds from trust to business. The actual transfer of funds occurs when a trust check is issued or an EFT transfer is done into the business account. Now we do the double journal entry. The first entry is the trust transfer. You debit the transfer control account and you credit the trust cash book. The second entry is the business receipt. You debit the business cash book and you credit the transfer control account. The effect of the above entries is A. Trust ledger of client A. On the credit side, you have the deposit received. On the debit side, you have the transfer to business. B. Business ledger of client A. On the credit side, you have the transfer from trust. On the debit side, you have the fees raised. You have now completed the exercise on the transfer journal.